Okay. Welcome to the Mississippi MBDA Virtual Lunch and Learn series. This series is to help your business to become bankable. And one of the things we're going to talk about today, which is so important, is business bookkeeping one-on-one. Extremely important in your business and how you keep track of your financials and your revenue and your expenses. Today presenter is Lisa Lowry, and she is the owner of Good Tax LLC. So take it away, Lisa.
Good morning, everybody. Again, my name is Lisa Lowry, and I am one of the partners of Good Tax. So, pretty much, I titled our series today Shoebox to Financial Portfolio, because we know a lot of times businesses start with the shoebox. I've been in the accounting and tax field for over 20 years. So I've had clients to actually bring me a shoebox with receipts to be able to bring their shoebox to their financials. So I think it is very important for businesses to be able to produce financials on a readily accessible time period. So, but if you have a shoebox, that's a little different. It takes a little longer. So what we're going to talk about is financial and accounting basics. So this is going to be part one. So financial literacy 101, why is it important to us? It is very important because the financial literacy is important because it equips us with the knowledge and skills we need to manage money effectively. Without it, our financial decisions and the actions we take or don't take have a lack of a solid foundation for success. So it's very important for us to be able to use our financials to make decisions and to look at our goals and to be able to plan based on hard numbers instead of, just saying, oh, well, I think it'll be good to do this. But a lot of times you just need the facts, you need the numbers. So why do we keep records? We need to keep good records because we need to be able to know what is our daily, monthly, even our yearly income and expenses. And from the income and expenses, we're able to produce our financial statements. You will, during the life of your business, you will be asked for your financial statements. And what that entails, it entails a balance sheet and an income statement. There we go. So some of the bases for business income, each business is different. Some businesses have, I'm just going to move this real quick. Some businesses have business income. And business income could be a product, it can be services that you provide to your clients. So there are different types of supporting documents that are included to be able to come to your income basis. So your cash receipts, your deposit slips, anything, invoices to your clients. So there are different types of source documents that we use to capture your income. Then we look at our expenses. What are business expenses? There any expenses that you incur to be able to handle your day-to-day activity for your businesses? We keep track of all the deductible expenses. Rent, for an example, utilities, any products that you buy for your clients. The list can go on and on. So it has to pertain to your business. And some of the source documents are your canceled checks, cash register receipts from the store, invoices. So that kind of gives you an idea of what we use to be able to track your expenses. So the basic financial tools involve three components. The first is your balance sheet. The balance sheet just kind of looks at your assets, any equipment or vehicles that the business owns, and then there are liabilities. And the liabilities is what you owe other entities. As an example, if you got the PPP loan, that would sit on your balance sheet because these are long-term expenses that aren't paid within a 12-month period. So they're paid over a couple of years. We would have any auto loans here on the balance sheet. We'll have your credit card. If you have a credit card that you use and you don't pay the balance every month, it has a balance. We would record that on your balance sheet. The next is the income statement. The income statement is the most important piece of your financial documents because that tells creditors the income that you've received during a specific point in time. It looks at your expenses. So what happens is we categorize your income. We look at all your expenses, and the difference between the two, it's either a net loss or it's a net gain. So it's very important to be able to keep the records. So if you're wanting to borrow money, they're going to want to see, well, is the business actually making money or do they have a net loss? So that particular financial document will tell us that. And then of course, tax planning, because your business, depending on the type of business you have and how you set the business up, depends on if you pay taxes at the business level or at your personal level. And we'll go into a little more detail a little later. So here's the balance sheet. This is the part I was talking about that shows your business net value, which includes your assets and your liabilities. And it's for a specific time. Let me kind of explain that. So what happens is the balance sheet is a running total from year to year. We don't close it out at the end of the year. It goes from one year to the next. For an example, we have your bank account, which is on your balance sheet, is included as your assets. So what happens is at the end of the year, the balance in your checking account is going to roll as a beginning balance on the next year. So that's why it's at a specific period in time. So I'm just going to show you, this is what a balance sheet looks like. So it basically has your cash, is normally your bank account, accounts receivable. If you bill clients and they pay you later, then you need to be able to keep track of your accounts receivable so that you know at any given time which clients still owe you money. And it keeps that so that, you know, when the clients pay you, it reduces the accounts receivable. And a lot of times what happens is on accounts receivable, I'm gonna give you an example like in QuickBooks. When you bill a client, QuickBooks automatically puts that invoice as income. So it recognizes the income right away. And what happens is the accounts receivable is what is designed to capture which clients have a balance with you. So basically, when you get a payment from a client, you're going to apply it to accounts receivable to reduce that amount. The next is inventory. If you have inventory, if you sell a product, you need to keep your inventory so that we know the value of what you have on hand based on your balance sheet. Another thing is are prepaid expenses. If you pay, let's say you pay insurance for the year, and what we normally do is we book it for the year in prepaid, and then we move it on a monthly basis so that it shows on your financials as a monthly. So that would be your total assets. And then we look at any property you have, being like a vehicle, buildings, equipment, and then we have to also depreciate your assets. And that basically is taking the value of the asset and depreciating it over a number of years. That way, we're not doing it all in one year. We're doing it over, like say for a vehicle, we normally depreciate that over 5 years. So that gives you 5 years of depreciation, because eventually on your financial statement, you'll see the depreciation will equal the amount of the asset. So that means we've basically exhausted the depreciation on the asset. So that gives us total assets. And then we look at liabilities and shareholders. And that basically is liabilities or anything you owe to an entity. That's what's captured in accounts payable. If you can always record a bill in accounts payable and then at a later date pay it. And we handle that in accounts payable. So we know at any given time which vendors are needing to be paid. Notes payable are real similar, but those are loans that are given out to the business, and we capture it there. So it gives us a total liabilities. And then we look at shareholder equity, and that's just the investment in the business for the owner. And some businesses have stock and some don't. So that is where we do the liabilities and the share equity comes. So just a kind of brief overview of that. And then the income statement. This is the most important piece, the income statement, and that includes all your income that's coming in. So we will record this based on the type of revenue that's coming in so that you can see, let's just say you're a hairdresser. You can categorize the income piece by the different services you provide. So you can see which services are most of your customers are using compared to the others. So it also includes money going out. So any bills that you pay, any clients, any vendors that you pay, we capture all of that on the income statement. So it basically shows how you use the assets and liabilities, because remember, your banking information is on the balance sheet. So it just shows the money coming in, which goes into the bank, and money coming out, which also flows through the bank. This is the income statement. This one gets a little involved. It shows quite a bit. Gross sales is going to be all of your sales that come in that are gross. So it's just all the revenue that comes in. Normally we have an allowance for returns and different allowances. So if you return any items, if you sell goods, then there's a line to capture how much that is at any specific time. So basically, we take the gross sales minus the sales returns and allowances to get the net sales. So if you have inventory, there's a special section that we do cost of goods sales, because we look at your beginning inventory, less any purchases that you purchase goods, any freight charges, any labor that's incurred, and then any indirect expenses that are housed with your inventory. And we come up with inventory and a cost of goods sold. So we take the net sales less the cost of goods sold to come up to your gross profit or loss, and then your net operating income. And then on the right side are all of our expenses. There's advertising, bank charges, credit card fees, our depreciation is in here, insurance, interest from any of your loans, payroll if you have employees, There's also wages. The gross wages is also captured. So these just list all the expenses that the business is paying out. And then tax planning, organizing your shoebox records by category, totaling your expenses. This is where we talk about business deductions and tax returns. So if you're a sole proprietor, you're going to capture your revenue and expenses on a Schedule C. If you're a partnership and you have other partners, you're going to get a K-1 at the end of the year that comes from the 1065 form, and the K-1 form basically just outlines your income and expenses per partner. And the K-1 is issued to each partner, and that's what you use to file on your personal return. And the same with the S Corp. S Corp, we do a form 1120S, and K-1s are also produced by any of the individuals that are part of the S Corp. And you file the K-1 when you file your personal return. And then there's a corporate return, which is taxed at the corporate level. So the other three are pass-through entities. So, well, the second and the third are pass-through entities where you file a business return and you move the information to your personal return. And then the last one, you actually pay taxes at the corporate level. So my question to everyone is, what type of accounting system are you using? Are you using a spreadsheet where you capture everything on a spreadsheet, your revenue and expenses, or are you allowing a electronic software to be able to do that? One good thing about the software is, for an example, QuickBooks. We set QuickBooks up where we attach it to your bank account. So your bank account, all the information is fed into QuickBooks, and we're able to categorize your income and expenses to be able to produce the financial records. If you do it on Excel, it usually takes a couple of steps to be able to do that. I find QuickBooks is it's real easy, it's user friendly. I have quite a few of my clients on QuickBooks. I'm able to go into their account on a monthly basis. I categorize all their revenue and their expenses, and I'm able to produce their financials in a short period of time. If I had to do it manually, there's a lot of labor that's involved in that to be able to categorize everything, but QuickBooks does it in a real easy fashion, and it offers a lot of different features. Like in QuickBooks Accounts Receivable, there's a component where you can send out invoices and you can record the payments that come in, and QuickBooks automatically records everything for you. You just have to do the recording of the payment, and it'll record it in the financials, and the same with paying bills. So QuickBooks to me is a simplified business tool to be able to capture all your financials, because a lot of times, you need financials within a couple of days, and to be able to keep it up regularly is very important, because you want to be able to make different decisions based on hard facts, not based on how you think the business is doing. If you have your financials, you can really pinpoint different areas and make sound decisions based on the numbers of your business. So it's very important to be able to have financials. So can you ask answer these 3 questions, which I think are very important for you to think about. Where is your business now as far as your financials? Where do you want your business to go? And have you developed a plan to get there? So it's very important that small businesses keep the financials intact so that you can grow your business and be able to continue to be successful. So if you have any questions, and then that's my contact information. If you have questions, if you would like our service, or if you just want to just brainstorm, just give us a call, and there's my contact information. Thank you.
Thank you, Lisa, for that presentation. I have a question that I hear a lot. Is, yeah, I'm doing it on spreadsheet, but how do I set up QuickBooks? Maybe I've been doing my financials on a spreadsheet, but I don't know like what accounts I need. I don't know how to, pull things down in QuickBooks. What would you say for those individuals who are still hesitating and to get into QuickBooks or some type of financial accounting software?
Well, a lot of times what happens in QuickBooks, they tailor QuickBooks to the type of business that you have. So
Okay.
when we do the setup, it'll ask all those questions. So it'll pull over like a generic chart of accounts.
Mhm.
So what I tell clients is, tell me what your major expenses are. And then
Mhm.
I make sure that those expenses are there so that they can utilize it. It's kind of hard to, um, if they're not familiar with QuickBooks, it's best to have somebody at least set it up the first time and go through it. And then if they want to, because I tell clients, I don't mind setting it up for you. That's important to me. I'll set it up. And you tell me what you want me to do in QuickBooks. If you want me to teach you how to do it, I can do that, no problem. Or if you just want me to handle it, because you have to reconcile the accounts receivable on a monthly basis. You have to reconcile if you're using the AP portion. You have to reconcile the bank account. So there's quite a few things that need to be done. But I'm willing to train them if they want to learn.
Okay. So
Yeah.
here's another question for you. Um, if I've been doing my financials, on the spreadsheet for a couple of years,
Mhm.
should I, when I get into a financial accounting software, should I move all of that over into the new software? Should I go back? And then if I do go back, how many years do you think I should go back if?
I would say at least go back 2 years,
Mhm.
because you want to do some comparison. You want to look at the last couple of years and compare it to your current year, or you can go back 1 year to be able to compare. But it's good to have at least 2 years prior to be able to do some comparison, because you want to be able to look. And it's kind of easy if they're doing it by the spreadsheet, as long as they have all of the data on the spreadsheet, we can upload it to QuickBooks. So it's a fairly easy process. So
Okay,
yeah.
absolutely. Okay, I think those are all of my questions. And again, Lisa, thank you for coming on and explaining the bookkeeping process. Why is it important to get into an accounting system when you first start, right?
Yeah.
So you can
Yeah. It's
grow
yeah.
with the system.
It's very important to start out that way. I always recommend to businesses, even if you don't have a lot of transaction, it's best to start when you're small, because once you start growing, that's not the time to learn it. You want to learn QuickBooks when it's light, you only have a few transactions, and that way you can learn how to maneuver within the system. Yeah.
Exactly, exactly. So any last thoughts, Lisa, before we close out to our businesses out
Um,
there on this topic?
I just want to say, I want businesses to be smart about their financials because it can make or break your business, the financial piece of it. So really make it a priority in the life of your business so that you can be even more successful with your financials. Yep.
All right. Well, thank you, Lisa, very much again for doing this webinar for us. We will continue our Mississippi MBDA virtual Lunch and Learn next week, where we're going to be talking about, we have two webinars coming up. We're going to talk about business insurance. That's
Okay.
another thing that you need. I always talk about the four things that you need. You need business insurance, you need a tax consultant, you need a bookkeeper, and there's another one in business insurance. So,
Insurance.
oh,
Yeah.
lawyer, having a lawyer,
Lawyer. Yes.
contract.
Yes.
So those are the four main things businesses need. Because even like me now, and I've been in business for, it'll be like almost 7 years. I still ask questions about my lawyer to my lawyer about contracts and stuff like that.
Mhm.
I always ask questions about taxes, right? Because the
Right.
new year is coming, right?
Mhm.
Talk to somebody about bookkeeping. How do I put this in my my QuickBooks, right? I don't know how to do that, right? So
Exactly.
you're always going to have questions, and if you can find someone, and Lisa is a good person to know about
Yes.
what's going on with your financials. And these webinars are about becoming bankable, right?
Right.
How do I get a loan when I need a loan? Do
Mhm.
I have my financials right? Because they're going to ask for them. This is
They
just
are.
like, what's your social security number? What can you give me your P&L and your balance sheet? It's just like,
Exactly. They're
you
yeah,
know,
they're gonna eventually they're gonna be asked for that information. Yeah.
exactly, exactly.
Yeah.
So if you have any questions today, please, her information is on here. You can go to Good Tax. That's her website. Info at good dot tax. So she is available to ask questions for you. And like I said, next week we'll talk about insurance, and we're going to talk about social media as well. So you guys have a good day, and we'll see you next week.
Sounds
Thanks,
good.
everyone.
Thank you.